Let's talk about why the biggest AI companies are betting on Reddit. So, Reddit is the platform everyone really underestimated. For years, it was written off as niche, and the other social medias sort of dominated the conversation: Instagram, Twitter, and Snapchat. Nobody really saw it coming, but now it's looking like it's pretty important for the biggest AI companies. So, when you look at the competitors, look, Twitter and X is a real competitor, and you can argue their growth is pretty high. It's not a public company, so you can't see the growth numbers. But when you're looking at Snapchat, when you're looking at Instagram, they're growing a lot slower than Reddit. Okay, so Reddit is arguably the only social media platform still in hyper growth mode. When we get into the numbers, we will see. So there was a recent drop in these earnings that we saw a few days ago. Reddit stock crashes 23% as AI search threatens user growth. So this is the fear we have in the market now, that AI is sort of taking away from Reddit's users, it's taking away from the growth rates, and it might be a challenge for the future growth. Look, when you get into it, the reaction was rough, and it's because of a couple core things. Slowly daily active user growth, when growth rates go from 40-50% down to the mid-teens, you're going to see the sentiment flush out. It's not good. And then the big concern is web versus app users. How many people are actually on the native app versus just getting reference from Google again? But these were arguably all known before the earnings were ever announced. And the big story now is AI summaries, now by Gemini. You see them everywhere, versus Reddit. But in the numbers, you can see business is crushing. I mean, they're doing about as good as you can ask. Revenue is up 60% year over year, over 60%, really crushing the earnings estimate. You see EPS crushing the estimates. Daily active users, 130 million, still healthy. We're now getting to the high teens growth rates, and free cash flow is pretty good. I mean, they don't spend a lot on capex. They don't spend a lot on marketing. They have a ton of cash, 2.8 billion on the balance sheet. They have a beat on guidance. They actually, I think they raised the guidance from the expected, about a 30 to $40 million raise. The numbers are great. And then we get into Reddit gaining more traction. Google, $60 million a year. OpenAI, that's another 70 million. Total licensing is about $200 million. And this will only grow. It's only expected to grow as these AI models, they need authentic data to train on. Reddit has all the data you could need. That is evident because Reddit is the number one most cited source by AI. And then we get into the bear case though. Sentiment is flushed. I mean, stock is down from 140 to its highs of 282. Sentiment is not good. EU policies on AI training has always been stricter than in the US. You know, if you're using human data, human text, it can get sensitive when you're using it to train AI. And monetization per user is small. You could argue it's in its early innings, which could be good, or it could be a bear point because they're not monetizing as efficiently as other social medias. But when we get into the bull case, the positives, a lot of analysts rate it as strong buy still, with over $200 price targets for the stock. Reddit has cited the goal to double daily active users in the US to 100 million. We have international revenue growth still in its early innings. It's still a low total number, again, because that monetization is weaker. And AI licensing, this is a big point. If they get a lot of more contracts, it could surprise. I mean, the amount of revenue they can generate from it can be substantial. But either way, I mean, you have a lot of companies betting on Reddit, a lot of companies giving the contracts, and it's going to be a question of whether the risks of Google dependency and daily active users slowing are going to outweigh the crazy growth numbers they're putting up and the profitability.